Life insurance has two main categories as it relates to our personal financial situations. There is traditional life insurance, which is there's a big death benefit and we pay in systematically over the course of time. When we do it that way, we get what's called traditional life insurance or non-modified endowment contracts. When we do it that way, the purpose is pretty obvious, but there are some more advanced ways to utilize it. See, with our homes, we pay off our homes, and at some point in the future we're able to take money out of our homes in a tax advantage situation. Well, there's a lot of companies out there that will use traditional life insurance and overfund it to provide some of those benefits in the future where they can, use return of premium for tax advantaged income. I'm not saying it's good or saying it's bad, I'm just saying that you should understand that that falls under the traditional side of things. There comes with some tax advantages if structured properly. The other side is investment grade. I don't think many normal people look at life insurance as an investment, but I think that that's a big mistake. Banks are insured by the FDIC, and because they are insured by the FDIC, there's certain regulatory parameters that they have to put on the banks. So you guys can actually go to FDIC.com. You can enter your favorite bank, Bank of America or whoever it is, and you can go to their actual holdings, what they hold for their assets, where they invest their money. Now, this is an exercise I would like you to really do, but Bank of America, I believe, is at $21 billion in investment-grade life insurance. So Bank of America, obviously they employ some pretty wise people. They've got quite a bit of money. And if they choose to put that much money in investment-grade life insurance, I think maybe we shouldn't just bat it down so quickly. There are some ways that, if used properly, can really provide some additional benefits. One of them, again, not a recommendation, but in some cases, investment-grade life insurance can be put into effect with really no penalties long term. I mean, there are ways to put dollars in and grow those dollars without really ever showing a negative. The key is that we have to pull the cost so far down and the death benefit along with it. And when you do that, what you're doing indirectly, or whether you're aware of it or not, is compensation to the agent is traditionally based on the death benefit. So the last thing that this guy wants to do in most cases is pull down the death benefit to make the internal cash better. But ultimately, you don't care about me, you care about you, and so I hope that information and education helps you. Investment-grade life insurance, traditional life insurance, both have benefits, both have drawbacks. Please understand and evaluate properly, and make sure you have someone that can really articulate it. One thing I don't say enough, and I'm going to take this opportunity now, is if the financial professional you're dealing with can't properly articulate it, if they can't take something complicated and give it to you in a very clear and concise, simple way, they're either hiding something or they just don't understand it well enough themselves. In either case, it's not something that I would recommend you tolerate from somebody who's managing your wealth.